Welcome to this week's edition of Reverse Mortgage Weekly, where we go over the reverse mortgage program, talk about local things that are going on here in Colorado with the reverse mortgage. And really, our aim is to educate as many people as possible about this wonderful program that's changing people's lives on a daily basis. My name is Zach Smith. I'll be your host today and every week for Reverse Mortgage Weekly. I own Chariot Financial. I've been in the mortgage and real estate industry for 21 years as of 2 weeks ago. I went to Colorado State University, graduated with a restaurant resort management degree, and went right and naturally, of course, went right into finance with the mortgage industry. This has been a great joy for me to do, to work with older adults and to really promote this program that really does change people's lives overnight. I am a CSA, so those of you who know that designation know it's not easy to get, and it is a designation that focuses on working with older adults. So what are we going to go over in this presentation? Well, we're going to go over who our typical clients are that we see for reverse mortgage, what a reverse mortgage is, what a reverse mortgage is not. The reason, again, that we do this education is there's a lot of information out there about this program that may or may not be the best information. We've heard so much stuff over the years. It does seem like this is becoming, it is already a wildly popular program with several people. But things are changing in the marketplace, but the attitude, I believe, with the reverse mortgage is changing because people are starting to realize that the benefits of it. It's kind of like, I've always thought the reverse mortgage was kind of like taking a nickel out of your left pocket and putting a dime in your right pocket. Well, when you focus on the nickel, you're not going to see any of the benefits of the program. And I think that's what had happened for several years, is that people look at it and say, well, they're taking a nickel out of your left pocket. Why do you want to do a reverse mortgage? But no one really was focusing on, well, wait a minute here. They're putting a dime in your right pocket. And I know that's a really grossly estimate of what the program is, but it's really just the point is that people focus way too much on the negatives and not enough on the positives of this program. Is it a good fit for everybody? Probably not. And the issue we run into nowadays with the marketplace is qualifying people. There's a lot of people who want to do this program, but because of the rise in interest rate and where the investors are at in regards to this program, they're tightening some of their guidelines. It's harder to get people qualified from an equity standpoint. Now, from income, assets, eligibility for folks, usually that's the easy part. Keep in mind, all mortgage lending is about risk assessment. So what they're looking to do is they're looking to assess risk. So on a normal mortgage, that risk assessment is based off your income, your assets, and your credit. You walk into the bank and say, hey, I want a mortgage for $400,000. Can you lend it to me? And the first thing they say, yeah, well, we'd be happy to take a look at it. How are you going to pay us back? So they look at your income, your assets, and your credit. Well, there's no required monthly payment for the reverse mortgage. So you're not looking at income like you would on a normal mortgage, because you're not going to have to crack that nut every single month and pay that mortgage payment. You can let it ride on top of the loan balance. So, and basically let the house make the payment for itself. So the risk assessment is completely different with a reverse mortgage. So we're also going to go into why people are choosing a reverse mortgage program and how they work in simple terms. So let's go ahead and dive right into it here. So who are typical clients that we see for the reverse mortgage program? Well, number one typical client that we see are older adults that are looking to increase their cash flow. So maybe they're not working as much as they used to when they were prior to retirement. Maybe they're living off a fixed income or something like that. So they're looking for ways to increase their cash flow without having to go out and get a second job or something like that. Number two, older adults that need relief from high monthly mortgage payments, credit card debt. That's a big one right now. It's kind of like a silent thing going on right now in our culture. Well, it's not so silent, but I think people sweep it under the rug. Credit card debt is really amassing, especially with, I think that's why we have all this data coming out about the inflation. Oh, everything's fine. People are still buying stuff. Yeah, but they are going into debt, and, interest rates on credit cards, 20% sometimes. So anyways, I digress. Car payments, student loan debt. I mean, there's utility bills. I mean, the list goes on and on. So folks are trying to put themselves in a position to, let's say you have a big mortgage payment, you're paying $2,000 a month, barely making it, eating bologna sandwiches every day, living off the little Social Security check that you get each month. Well, what if you could put yourself in a position to pay that mortgage payment after you leave the house? That's exactly what the reverse mortgage is doing. You're still paying the mortgage payment. You're just not paying it right now. You're paying it when you leave the house. Sometimes leaving the house is usually one of three ways. One, you pass. You pass and leave the house to your heirs, or if you don't have heirs, you leave it to, whoever, charity or whatnot. The second reason, maybe you become a snowbird or something like that, or you move to another state and it's no longer your primary residence. Or the third way is, maybe you go into a facility or something like that. But as long as it's no longer your primary residence, the note would be due within 12 months of that happening. So, one of the things that people bring up with this program is, in fact, I had somebody call me, a few months ago, very respected real estate agent. He was working with his client and her mother had passed. And he says, Zach, we need help. My client's mother just passed. She had a reverse mortgage. We're afraid to call the bank because we don't want them to put it into foreclosure. And I'm thinking to myself, oh my gosh, like I take it personal because, I know that I've been teaching classes for the state here for about 8 years. And the reverse mortgage class, we go over a lot of this. It's a 2-hour class. This is only a 30-minute segment here we're doing today. But the 2-hour class goes into great depth in regards to this situation. It is the most friendly mortgage in that situation. Because what the reverse mortgage says is that, okay, if someone were to pass or something like that, the heirs will have 6 months to determine what to do with the property. But they can also petition for 2 free 3-month extensions. So essentially, they get 12 months to determine what to do with the property. If you have a normal mortgage, plain vanilla 30-year fixed, the mortgage company wants their payment. And if you don't pay the payment in 3 months and you go 90 days delinquent, they can officially start that foreclosure process. And so that, the clock is ticking. So folks, they have the complete wrong idea about this program. And again, this was an experienced agent who's been in the industry for several years. So I, politely explained, well, actually the reverse mortgage is very friendly to this situation. Call the investor, call whoever the mortgage is with, and let them know what has happened. They'll ask for a copy of the death certificate. And basically, then you can clean the house up, put it on the market. If the family wants to buy the house back from the lien holder, which is usually the bank, they can buy it, they can refinance it into their name. So, it's just that information right there was a good example of just how little people know, and how, 2 examples. One, how little people know, and 2, how friendly this program is in that situation. And then we've got a third group of folks that we work with, generally are folks who have their house paid free and clear. They have, a couple million in their retirement, and they're looking for a safety net for their retirement assets. Those are folks who are savers. They've got money in the bank. They want to pass on a higher net worth to their heirs. And they know the best way to do that is to don't interrupt your investment accounts. My gosh, what would you tell yourself 20 years ago? Invest in Bitcoin, something like that. Buy Apple stock, Microsoft stock. But 20 years ago, I would have told myself to invest more and to not touch it. Don't touch it for anything. And that's really the strategy that a lot of affluent people use with the reverse mortgage, because life happens. Maybe they have expenses that come up unforeseen, like medical expenses, or something happens with the house or something. They got to pay, an amount out of pocket. Well, they can reach into that reverse mortgage line of credit, pull the money out, and not have to make a monthly payment. Now, there still is a monthly payment, but they're not required to make it. So that's a lot better than pulling out from your assets and from your retirement. One of the questions that I ask all of my students when I do the class is, I have that little exercise. I have $1 million suitcase with $1 million cash here with your name on it. Would you like that? Or if you have a choice, you can take $1 million in the suitcase, or you can choose a penny that doubles every day for 10 days. So what would you like? Would you like the $1 million cash right there in the bank? Or would you like this penny, the magic penny that doubles every day? Well, you want the penny. After 31 days, that penny's worth $10 million, over $10 million. 1 penny, 2 penny, 4 penny, 8 penny. After 31 days, it's going to be worth more than $10 million. So of course you want the penny. But the point I'm trying to make with that penny is that that's a lot like our investment accounts. The longer you keep them uninterrupted, the more they're going to grow, the more balance you're going to accumulate. And ultimately, what a lot of these clients understand, and they understand it very well, the higher net worth you're going to pass on to your heirs. So with that same penny, going back to that example, well, if you pull that penny out 15 days, it's only worth about $115. Same thing with our retirement accounts. You have an unforeseen event that comes by, and you dip into your retirement to pay for it. Well, you're not going to realize as much growth as you may have. So that's really the point of that story, and why the reverse mortgage really works great as a financial safety net for the people who get one. So what is a reverse mortgage? Well, it is a mortgage loan. One of the myths that we hear about this is, you give the house to the bank. Well, by that criterion, any mortgage, you give the house to the bank. If you have a 30-year fixed, or you got a home equity line, or any kind of balance against your house, technically, you don't own that property. The bank owns that property because they have a lien against it. They have invested interest. For example, on a forward mortgage, if you don't pay your mortgage, like the example prior, they can go into foreclosure, and then the bank can seize your property and auction it off. Well, same thing with the reverse mortgage. There's a lien against the property. So you do own the property. You're the owner at the county, but there's a lien against it. So it is a mortgage, just like any other. Monthly payments are part of the reverse mortgage. And that's where I think, I've been kind of hard on some of the critics of the reverse mortgage. Let me be hard on me and my industry and the people who are out doing these loans. There's a lot of new people doing reverse mortgages because the business on the forward mortgages dried up. It's May 29th, 2024. And last I heard, 40% of the mortgage industry is gone, mainly because of interest rates. Interest rates have gone up. There's a lot of folks that were, getting into this industry when the getting was good. In 2020, when you get 2% interest rate, the business was just falling out of the sky. So there was a lot of folks who got into the business at that time and said, hey, I want a piece of the pie. So they said, okay, well, I'm going to start originating mortgages. Look at me, I'm a new mortgage person, which is great. They're getting into the industry. But once things turned and the interest rates went up and all those refinances went away and all the purchase business went away, well, then it was pretty scary for these folks. So they said, well, how the heck am I going to put food on the table? Well, I'll start doing reverse mortgages. That's what I'll do. I'll start doing some reverses. So we've got a lot of new people in the industry. And the reason I talk about that is that I feel like we have a duty to give you the facts, in the sense that, a lot of people are out there advertising this program as a payment-free mortgage, as a mortgage that is not got a monthly payment. And that's not correct. It does have a monthly payment. In fact, you can treat a reverse mortgage just like any other loan. You can pay it off. You can pay the balance down. The difference between a normal mortgage and a reverse mortgage is that you're not required to make that monthly payment. So, a lot of folks, they look at this program and say, well, you have the potential. Doesn't mean that you will, but you have the potential to go upside down on this program. Well, yeah, you do. And you know what? You know who loses if you go upside down on the reverse mortgage? The bank. The bank takes a big loss if you go upside down. And a lot of folks they look at this program, and I've heard it time and time again from folks, time and time again. Oh, well, that's just a program so the bank can take your house, so that you can go upside down. The bank wants you to go upside down in your house so they can take it. That is the silliest thing I've ever heard. It really is. It's just so silly. Banks don't make money on real estate. Just like in 2008, 2009, horrific decimation of the complete mortgage industry and consequently the housing industry. Banks had so many properties on their hands. There were so many foreclosures. And there was a sentiment that the bank wanted your house. They wanted to come in and take it. No, no, no. No, no, no. If the bank owns real estate, it's in trouble. That's a big problem for them. They don't want the hassle. Why? Well, they can make 20% interest on a credit card that they give you. That's a heck of a lot easier than owning real estate. They can make money on a 30-year fixed loan. Everybody's all excited that just, got into these 3-4% interest rates and 2% in some cases. Oh, I just refinanced my 30-year fixed into a 2%. And I'm not trying to say that's not a good deal. That's an awesome deal. But you're still in the rat race. You're still in an amortized schedule. And if you're in an amortized schedule, especially for 30 years, you're paying 50% of the interest on that mortgage in the first 10 years. That's what they want. They want the interest. They want the interest money. I mean, you give the bank $10 and they lend out 9 of it on interest. That's how the banks work. So the sentiment that the bank wants your house, they want you to go upside down, it's just not, it doesn't make any sense. It doesn't make any sense. It's just something that sounds good for some folks. But going back to my industry, yes, there is a monthly payment, and people do have the potential to go upside down on a reverse mortgage. So it is a trade-off, but it is also a choice. If you go upside down on your reverse mortgage, it's because you chose to do that. And look at me. I can only give the example that's closest and near and dear to my heart. Me. Second I turn 62 and I'm eligible to do a reverse mortgage, I'm running down to the bank to get one. I'm running. I'm not going to walk. I'm running down to the bank because my whole financial retirement strategy relies on it. It's all about increasing my cash flow and passing on a higher net worth, not so much more equity. 9 times out of 10, when people are bequeathed a home, they call a real estate agent to sell it. Well, these days they just, look them up online and go through, the 1% listings and all that stuff. Things are shifting in our industry right now. The other thing that the reverse mortgage has that is pretty unique is it does come with a line of credit, cash out, cash payout, also, or a tenured payment. People can use these like an annuity where it pays you back each month. So what a reverse mortgage is not. It's not a government takeover of your home, as we just, described. The bank doesn't want your home. The government doesn't want your home. Not everybody's out to get you. I know I don't want to burst your bubble, but you have folks out there who are so concerned about, oh, they're monitoring my every move and all this. My approach to that is, boy, I am the most boring person ever. Feel free to monitor my every move and listen to all my conversations. You might learn about how how excited I get about my Brussels sprouts that I'm cooking in the air fryer these days. Maybe I'm a little more simple than most people, but that's kind of how it is. And so it's not a government takeover of your home. They don't, that doesn't even come into play. It's not a way to make you upside down on the home. Again, one thing we can count on, though, and if we want to put our tinfoil hats on and talk about big industry and corporations and all the stuff going on, one thing they are interested in is they're interested in making money. They're interested in making a profit. They got shareholders to report to. Best way to do that is not to take on investments that they're going to get shorted on. If they sell your house and you go upside down on your house, the bank loses out. They lose out on the potential profit that they could have made. So it's not a way to make you upside down in your house. In fact, that's why it's becoming increasingly harder to get people qualified for the reverse mortgage, is because of the increase in interest rates, and they don't want to go upside down. And it's also not a payment-free mortgage. Again, there is a monthly payment, but it is optional. Not like in a 30-year fix where you're forced to make that monthly payment. So why are people choosing these in retirement? I mean, why is this something that people are even interested in doing? Well, to me, it's quite simple. People need liquidity. Equity is great to have, but it's not liquid. Long-term financial planning is also a pretty major reason why people are looking at this option for themselves. So let's talk a little bit about home equity and liquidity. Equity is great to have, but it's a lot like having a glass coffee table right there in the middle of your living room full of cash that you can't get to. It's like the folks who are, cash poor and equity rich right now. They're just barely scraping by, but they own a home that's worth $600,000, $700,000, $800,000. Well, you look at that and you're like, oh, well, you must be doing real well. Well, yeah, if I sold my house, but I don't want to sell my house. Where am I going to go? So the equity, with it not being liquid, creates an issue in retirement. So it's not like you can take a picture of your house and go down to the grocery store and pay for your groceries with it. The cashier might look at you a little funny if you try to. She might think you're trying to be funny. Doesn't work that way. Yeah, you own a house, you got a lot of equity, but you don't spend it like that. You've got to. That's the conundrum that a lot of people find themselves in. So why does this matter in retirement? Well, most retirees are on a fixed income right now, and they have limited cash flow because they're not able to work as much as they did as they were in their 20s and 30s. And, a lot of people, a lot of the remedy for that is for a lot of folks, well, I'll just get out and work more. I'll just get out and get another job. Well, most people don't want to work into their 60s and 70s. And you see it out there. And, God bless our good brothers and sisters out there working in their 60s and 70s. Some of them are doing it by choice. I would say everybody's doing it by choice, but a lot of them are not real happy with that choice, having to work in their 60s and 70s. And unforeseen medical expenses can liquidate retirement assets prematurely. It's still the number one reason why people file for bankruptcy. So the reverse mortgage solves the problem of liquidity. So the reverse mortgage is designed to help older adults access equity when they need it, either by establishing a line of credit, which really does act as a financial safety net for people. Also a cash payout. They'll give you a big, lump sum of cash. The guy will show up in a suitcase, handcuffed to his wrist, and open up all the cash for you. Well, maybe not like that, but you can get a cash payout. or converting an existing mortgage payment into an optional reverse mortgage or optional reverse mortgage payment. So, or payment optional reverse mortgage. The next reason folks will do these loans is for financial planning reasons. That last slide, you can run it back if you're on the webinar here, or once you get a copy of it. Just goes over some of the folks who have actually done papers on these financial folks. You know, Sachs and Sachs did a study, Texas Tech did a study. There's a lot of financial folks that have done a lot of digging in on, okay, does this program work, or is it a crock? You know, let's get down to the numbers. You know, show me the money. You know, how does it work? You know, and based on a lot of those studies, as you can see, every single one, if you use your home equity in your retirement, your financial assets are going to last you a lot longer. And I know some of you are thinking, duh, you know, if you add more into what you're trying to accomplish for your retirement through by way of your equity, yeah, of course it's going to last longer. Of course it is. Yeah. So that's really one of the premises behind the reverse mortgage, is to ensure that people have a longevity with their retirement, because one of the number one fears that probably the number one fear of retirees is running out of cash prematurely. So there's different types of reverse mortgage loans. You know, we have what they call the proprietary type reverse mortgage loans, which is kind of like a conventional type program. So if you're in a condo complex that isn't FHA qualified, then we can look at those type of programs. But by and large, most of these programs are FHA type programs. So you'll hear the term HECM. Well, what the heck is a HECM? Well, the term HECM is an acronym for Home Equity Conversion Mortgage. That's FHA's big fancy name for the reverse mortgage. And HECM loans are administered by HUD, and they come with certain protections for the homeowners. These include a non-recourse feature, so your family or you are never going to owe more on the property than what it's worth. Say a meteor hits the earth tomorrow, and all the property values plummet. Well, the reverse mortgage is probably the best program you want to be in that situation, because we think it could never happen. But, you know, those of us who lived through 2008 and 2009, 2010 know that it can, and it did happen. So if it did happen like it did, reverse mortgage, probably the number one program you want to be in, mainly because you are in a non-recourse type loan. Well, we know this fella. This is our good buddy, Tom Selleck. And, you know, he's quoted as saying, you know, the reverse mortgage loan is just like any other loan. The only difference is how you pay it back. And I'll tell you, our buddy and his legendary mustache has hit the nail right on the head, because it really is. It's just like any other program. The only difference is how you pay it back. So why is it called a reverse mortgage? The reverse mortgage is still a monthly mortgage, still has a monthly payment. The payment is optional. If you choose not to make a monthly payment, the balance will grow every month, so it's going to grow in reverse. Taxes and insurance will need to be paid separately in most cases. Very rarely do we pay the taxes up front. We can, but it's just a rare occurrence. So two of the biggest myths about the reverse mortgage that I've run into is that you'll be upside down on your home within a few years. You know, we really can't go very high on the loan to value for these, so the amount that you can borrow compared to the value of the home. So you can go upside down, but it takes a really long time to do that. Years, several years. You no longer have title to the home is the other myth that I hear a lot. Again, that couldn't be further from the truth. So there's three ways to structure your reverse mortgage. One, you can get a line of credit. So basically, that's the most popular option, where people will basically take out cash and put it into a line of credit. Cash payment or a tenured payment. Again, that's like turning the house into like an annuity so that you can get paid back each month. So how is the qualified amount determined? Well, it's determined based on the age of the youngest homeowner. So if you have so for instance, a 62-year-old can borrow less than someone who is 82. And it's really an actuary table that they use because they're basically hedging their bets as a bank, and they're saying, okay, well, the person who's 62 is going to be in the property less time, or no, more time than the person who's 82. So we'll give them access to less cash because there's a potential for them to be in the house a lot longer, which would increase the probability or a probability of them going upside down. And again, if they go upside down, the bank loses. So they really try to guard against that. So a lot of times they'll offer more cash to someone who's older than someone who's younger. Well, that's all we got for you today, folks. We try to keep these at 30 minutes. So if you have any questions for me, or if you'd like to, schedule time with me, you can reach me at chariotreverse.com. That's chariotreverse.com, chariotreverse.com. Thank you so much. We'll talk to you soon. Hope you have a great rest of your day. Y'all come back now. Yeah.